Hello again, everyone, and welcome to the Options Mentor. Now we are heading into what really will be the last week of the year that has big news. We do have an FOMC announcement on Wednesday, and a GDP on Thursday, and a PCE, a big inflation report the Fed likes to follow, be on Friday. But of course, that'll be after they've made their rate decision this Wednesday afternoon, and then they'll have a press conference with the chair. So after this week, it'll just be mainly big funds moving the market around by window dressing for the end of the year, buying and selling whatever they want to say they were in or out of. So after this week, I think we'll definitely see a slowdown in news inputs. But this week, we have a lot of them. So I want to talk about a few things here. Let me go over to my chart first. You can see here, we're still around these all-time highs in the SPX. And I'm going to talk about a trade there this weekend, some concepts about trading larger also. But here, the VIX, of course, it's down around the lows of the year. It was a little lower back in the summer, but other than that, we're right there. That's why another thing I think, this is just an aside for you. If you think after the first of the year, many times the market can change. If we've been in a bull market, it can at least pull back a little or it can continue on. But if you have a mind that we're going to have some kind of a decent pullback, maybe a couple hundred points in January, one way to play that is to get long a VIX call vertical. Because when the market goes down, of course, the VIX goes up. And you can do this different ways. I like to do verticals. You can buy outright calls if you want, but I like buying verticals. It's no point in selling verticals in the VIX, particularly on the call side, a little dangerous. Put side, you don't get paid. So just do long debit verticals where, for instance, this is the future VIX here. The cash VIX is at 13.8, future VIX here at 14.5. And you could do things like just buy an out of the money vertical. Here's an example, buying the 15, selling the 20 for $1.14. And then if we get that pop up in January sometime, you're going to be looking good. And you could do them more narrow. Maybe you want something a little cheaper. That's fine too. You could do them 2 or 3 points wide. Cost you less. Ultimately, you can make less. But still, pretty good reward on these if we get like a nice 2-point spike in a day. So that's something to have kind of a back burner if you feel like a reckoning of some sort's coming. In any market, it seems like, you should have a pause, maybe a little pullback, back and fill, pause to refresh, as they call it. And I think we're long overdue. So that might be one way to extract a few bucks out of that if it happens. Now I want to talk about this week and trades you can do. And to me, we're in low VIX. To me, it's calendars and diagonals. That's what I would be doing. And I'm going to talk about doing a calendar this week. Now, I would like to do it for this Friday or next Friday. You could do it for either. Now, most times over the years, I haven't started a calendar with the short being the Friday of the week I started it in. But I've been finding lately that those things can work. And it just makes more sense to do that. As I was telling my folks last week over at Aramer.com, there's really no point in getting in a trade last week for this coming Friday because you won't really see any decay till Wednesday. So to me, if tomorrow or even Tuesday, set up a calendar where the Friday is the short, and then you buy, I'm going to go 4 days later because I want a little extra Vegas sensitivity, something like you're seeing here on your screen. But you could do that tomorrow or Tuesday. And I think if you put it on tomorrow, I bet you have an excellent chance of getting out of it at 8 or 10%, as long as we don't get crazy out of range with the price by Wednesday or maybe early Thursday. I think you should be in pretty good shape. And if you look at this, just remember that it can go too far, right? If we get a big price move off of the Fed, well, this could be a problem. We'll have to see how things go. But if it stays in range, we're going to be looking pretty good by Wednesday or Thursday if you put on one of these tomorrow. Now let's take a look here this week. And by Friday, expect a $75 move. between now and Friday, and even let's just look between here and Wednesday. So this is inclusive of the Fed announcement, 53 bucks. Now with this, you can pretty much have that range in this trade if you put it on around the money. And I would use calls. It gives you a little extra room up here. But I think that's a trade I really like for this week. And unless we get into tomorrow and, and something really strange acts upon the market. Now I want to talk about a different concept. We'll just use this trade as an example. People often ask me, how do you decide when to get bigger in size? Particularly with what I like to do, I only like to have on maybe a couple trades at the time, sometimes three. And what I'll do with I just make them bigger. If you want to employ or deploy more capital, then you can just do that by making two trades bigger rather than, say, having 10 trades. So you just make things bigger. But when do you decide to get bigger? Well, first off, whenever you're trading a new strategy, let's say it's a calendar like this, you should be doing it on paper to make sure you understand how it moves and the mechanics of it. Once you got that down, you can do things like one lots, where you're getting in here. This would be a little over 500 bucks here. So you're not putting a whole lot of money into it. And then you go, okay, this is working. It works. It works. It's been working pretty good for you. All right, then let's go to two. Now it's kind of an exponential move if you think about percentages along the way, but that's kind of the nature of things when you go 1 to 2 to 3, whatever. And now this is working for you. And by the way, this is all, of course, predicated upon you having the capital and wanting to deploy it. Maybe you don't want to put any more than $1,000 in calendars ever. Well, that's fine. But if you wanted to build up and get bigger with them, this is how I would do it. So once this 2 works, maybe go to 3. Or you could even consider 4, and you're working your way up. 6, 8, 10. Now let's talk about this again. Here's one thing that you have to get used to. Let's go back here to a 2 lot. Now, a 2 lot's going to cost you about $1,000 here. And if it gets out down here, let's say we go down 60.50 to 60.20, starting to take on a little pain. Oh, it's $100 and something. Should you get out of the trade here? Well, no. In fact, I wouldn't do anything here. I'd let it work here. If it gets down here much further, you could do a repair. But just in here, I'm just going to let it work. So you have to go, okay, yeah, I'm down $100 and something, but I know what that looks like. I know what can happen over time. So you get used to that. And another factor of, say, maybe later on you're trading 4. Well, now when I get down here, I'm down over 200. But you're used to it a little bit more, right? Remember before it was 100, now it's 200. And the thing is, as you go along, one of the things, not only are you using more capital because you want to make more money, hopefully, you also along the way will be learning to look at things through the perspective of more, right? So now if I go down to 60.20, I'm down almost $400 here with a 6 lot. But the more you do this, the more you will see that and not be as challenged by it. And I'm not saying you shouldn't be worried about being down $300 or $400. That's not what I'm saying. But if you want to trade larger, over time, you're going to have to learn to stare at that kind of number and go, oh yeah, well, I'm down $300, $400, $500. Okay, that's nothing. You have to get yourself in that mindset where, hey, that's really not that much. And now you're up to 10 lots. Maybe you're doing 10 lots, and now we're down $600, $700. But by this time, you should have, of course, been making money, or you shouldn't be growing in this size, right? So you have more, and you are more comfortable with the strategy and maybe adjusting it so you can get more comfortable with it. Because whenever you start, if you ever want to get even bigger, I mean, I have myself traded a lot of 50 lot calendars and more. So whenever you get up to that, or even get up to 20s, which is a pretty big number for most folks, 20 lot here, is about $10,000. And that's the thing, though. You're getting used to the number. What am I down? What am I up? Oh, that's another thing. You're in this a few days, and maybe, you're up, hey, look, I'm up 400 bucks. Is that really anything? Well, it's better than a loss. But what is 450 bucks here? Well, it's not even 5%, is it? Because 10% of 10,000, which is what you'd have in this trade, of course, would be 1,000. This isn't even 5%, but it looks pretty good. Back whenever we were trading 2 and 3 and 4 lots, right? This 455 looked big. So you not only do you learn to see, losses for something that you can tolerate and overcome with adjustments or whatever, you also have to look at winners and hey, maybe that looks like bigger money, in my past brain, but now I'm going, oh, that's not really much money at all. It's not even 5%. Well, of course, if you always took off trades at 5%, you could do it. Yes. The thing about that is sometimes if you always take off trades at a really low level, like 5%, you can end up with whenever your losses are bigger, they can wipe out more of them, obviously. So that's what I wanted to really impart to you today. How do I get bigger? Well, I get bigger when things are working. And what goes along with that? Well, you're going to have to learn to, hey, I'm down several hundred bucks or I'm down $1,000. But look where I'm at in the graph. That's what I do. It's not I use this graph a lot to tell me, hey, am I in a good place or not? Not my P&L right off the bat. When you look at this, you can go, okay, yes, I'm down that today. But with time decay in just a few days, I'll be in the same place and be up nice. So that's how you have to look to this. In this style of trading, when you start a trade, you haven't made any money, right? We're really primarily trying to get time decay. Well, when you first started, you haven't got any, so you have no profit. And if it moves around a lot, it can be a little worse for you at the beginning. But it doesn't take that much time whenever you're getting an expiration week generally to start seeing the theta pay off and the P&L go up. So that's kind of the approach that I like to take to getting larger, when you do it, how you do it. Now, another thing, let's say I've worked my way up, I'm doing great here. I'm at 20 contracts, but man, I've had a rough month here, a rough month. What do you do? Well, first thing I would do is back it down. If you had a rough month or so, back that size back down. Maybe go from 20 back down to 16, or from 2 back down to 1, or 4 back down to 2. Cut it down in some way. If it's really a bad month, I might even go all the way down to 10 from 20. Otherwise, if you're struggling a bit, at least pull it in some. That's step one. Now, another thing you want to do, if you've had a rough month, you pull back to size. And what I would do then is maybe take profits a little quicker. Maybe I normally take profits at 10%, 8%. Well, you know what? If I've been having a lot of losses and I cut my size down, I might even take that 5% gain that I talked about. Here we are. This is a $5,000 trade. You might even say, hey, I'm going to get out of this when I'm up 250 just to get a win, because it's very important for you psychologically to get those wins back. So you want to get some. So if you get, hey, I went out and I cut my size, I took some quick profits, boom, do that a couple of times, feeling better. If things are working again, now we can creep back up. Don't go right back from 10 to 20. If you can avoid that mathematically. I realize if you went from 2 to 1, you have to do the same. But, try to creep it up a little bit, keep going with it, maybe work the profits up until you get back to where you were. That's how I like to handle getting bigger. That's how I like to handle just the struggles of losing periods. I mean, this market, for the most part, this year has been very tough to trade in many segments because of this upward trajectory just was unrelenting for a long time. And that made volatility drain, and it made a lot of trades problematic. Um, Not normal, or at least not in my experience of doing this particular style now for 19 years. 2023, 2022, or excuse me, 2022, 2024 are not really representative of most of those times. Those were tougher times. And of course, we had totally different ball game in 2020 with COVID, but that worked out very well, at least for me, and I think a lot of people that I traded with. So as we get forward, we get into January, and you want to maybe try to work up something bigger. Just, follow all your basic principles. Where are we at on the VIX? Is this the right strategy? Do I know what I'm doing? Is this the right amount of money for me to even uh, use, for this type of trading? And work yourself up from there, kind of turn over a new leaf of a more disciplined trader that you're going to follow where you're at all the time, not at the end of, a week or a month going, am I up or not? You know whether you're up or not. Just keep working your way into more and more good habits. A lot of times people like to start those, in the new year. We're at the new year. Why not? You can get a clean start there, but there's nothing wrong with getting a clean start tomorrow if you need one. And you'll just be ahead of it by January 1st. And everybody else is starting resolutions. You'll already be 2 weeks into years and doing fine. So that's something to think about here as we head into what I think will be our last really busy week of the year in the market. Then after that, we have Christmas week, New Year's week, little bit of fracture there with those being in the middle. That is really strange. Christmas on Wednesday, really, for those of us who trade, that's a strange setup, right? Or the first on a Wednesday, of course. That makes it a little harder sometimes to figure out what the market's going to be doing, because sometimes those 2 days, you could have after Christmas, maybe very low volume, that type of thing. So we'll have to see how all that goes. But it's definitely a very strange time of year to be trading. This should be what I would call normal. But after this week, probably not so normal. All right. Well, that's what I got for this week, folks. Hey, don't forget to check out the description of this video. I got a new course out called Back Ratios and Directional Flies. It's a deep dive into that where I explain strike selection, when and how you do it, why you do it, all those things. I have a course out on that, and it's on sale because as soon as I put it out, I put all my courses on sale. So normally they're $250 to $275. They're all on sale for $199. You can also buy them all in a big bundle with quite a discount. So go over there and check that out. The links are in the description. You can also, of course, check out being with me for Opening Bell and Traders Lounge, and in the Trade Alert Service. By the way, the Traders Lounge Opening Bell, that the price of that's going up just slightly in January. I'm going to keep the Trade Alert the same, but I'm going to have a little bit more on the Opening Bell Traders Lounge, where you can be with me 5 days a week there. That's going to start costing a little bit more in January. If you want to check it out now, you can also pay for a year this month, and you would avoid that until next year. So and that's quite a deal too. It's instead of paying $15 a month for a year, it's $500 for the whole year. Get yourself a little bit of money off there. So check all those links out. I would appreciate it. Maybe you can join us over there. I have one-on-one mentoring. Email me anytime you'd like to try that or hear more about it. And don't forget to hit the like and subscribe on this video. And I'll be back with you guys next week, right before jolly old St. Nick comes. So talk to you then. Bye-bye.